guys, and welcome to another develop video. Today I take an in-depth look at Palantir Technologies Incorporated, an American publicly traded company that specializes in software platforms for big data analytics. The ticker symbol is PLTR, and first of all, we're going to start with valuation. Their free cash flow yield is sitting at a measly 0.67%, and the price to earnings is an absurd 658. Now, looking over to business metrics, the return on equity is 9.2%, the return on invested capital is 5.5%, and most importantly, the current ratio is 5.95. So, what I can clearly see here is that they probably diluted their shareholders a lot, but this way they've managed to keep zero debt and a very good short-term asset base. So, this is why they have an absurdly high current ratio. Now, first we'll start with Graham's valuation, of course, using the revised valuation formula because the old one is old, it is not really applicable anymore. With an estimated 2025 earnings per share of 0.55, a 35% growth rate, and a 5.45% current yield on AAA corporate bonds, we get an intrinsic value of $23. The discounted cash flow model, using a 30% growth rate for 9 years and a 2% perpetual with an 8% discount rate, we get an intrinsic value of $54.75. Historical multiples, well, they do not have an historical multiple since they've been they haven't been profitable for most of their history. Now, for multiples, I know they're technically not in the same industry, but I compare to SAP, Microsoft, and Amazon because of cloud. And although Palantir is in defense, I think I couldn't have found any other competitors which are closer to Palantir. So I used SAP, Microsoft, and Amazon, and I got an intrinsic value of $8.35. The dividend discount model doesn't apply since they do not give out a dividend. Now, for the output, they are the model that I use is uses a 3-point average. So the average of all of these three methods, and the average is $28.73, which is basically the intrinsic value. And using a 15% margin of safety, we get acceptable buy price of $24.42, which is basically a fifth, I guess, of the current price and very far from any realistic buying. Now, if it somehow dropped to $25, sorry, 1 second. If it somehow dropped to $25, I think it ought to be a buy, but I don't think it would. It is a very overvalued stock, and I do not suggest you buy it. If you believe that they have a 50% growth rate, maybe, but even then, I don't think it's a buy. Let me check. If only if it's a yeah, if it's a 45% growth rate, it's a buy, but I don't think they'll get to 32 billion in free cash flow in 2032. So yeah, this is absurd. Um, To end the video, I'd like to talk a bit about our affiliate for today. My affiliate for today is Ticker Data. Ticker Data is the tool that I use with the real-time financial data and the ticker symbol and all of this beautiful template here. And you ought to check it out if you're a great investor, if you love investing, and if you believe you can do better. You ought to check it out because it will improve your investing journey a lot. Also, do not forget to check out my investing blog where I feature a lot of in-depth analysis on different stocks, on news, and on the stock market in general. And I think as a novice investor, you'll just eat every bit of information from it. I hope to see you in the next video. Bye.